Okay. All right. Welcome everybody to Wall Street Reporter's next Super Stock live stream, August 12th, 2021. We are back with Logiq, now trading also on the New York Exchange, as well as the OTC. Same symbol, LGIQ. Could be our next 10 bagger. So Brent, with that in mind, I want to kind of jump into it. We're running a little bit late, so I want to get right into the heart of the story here. Is investors want to know what is going to make Logiq go from $3 and change US to $20, because I think there's been talk of this being potentially a $20, $40 stock. I think if you get to 100 million run rate revenues, you would get that value. Right now you're at 38, 40 million run rate. Yes,
that's correct. That's right.
What needs to happen? I want to focus on what you need. What's going to be the path? How are you going to get? Can you get to that 100 million in the next 12 months? If you can, because if you can get that velocity to 100 million, the stock is going to just take off like a rocket.
Sure, you're actually, yeah, you're right on. I think to answer that properly, I'd like to make an analogy, which I think people can now or after the presentation, they can take a look at. There's another company that we were introduced to last year that trades in Toronto. They did their IPO up in Canada about a year and a half or so ago. Lightspeed, it's LSPD. E-commerce space, but they do more of a point of sale type product. But when we were talking to investment bankers last summer, we were introduced to them as a potential partner. I think their share price back then was, I know it was around $10 or $11 a share, trading at about 4 times revenues. The most we ended up doing with them is we put them on our comp table. So, when we show that chart that shows all the valuations of peer companies, they're on there. They're currently trading at 46 times revenues. Now, I actually just looked this up yesterday because last time I was on, you were asking specifically about M&A. How can we grow? How can we justify?
So Brent, so here's the idea is that, okay, so this Lightspeed was last year trading at 2 times the revenues. The multiple expanded, so it's 46x. So, I mean, the stock is, I don't know, what's the stock? The stock went up.
It's $117 now, so it's up 11x.
11x, okay.
Huge valuation, $11 billion. Now, I bring them up because at 4 or 5x, people who bought in, when it got to 10x, maybe they started feeling like, okay, it's doubled. Have I missed the run? I mean, there's okay. So if you look at what they've done, because this is a path that we've already started following, and we're about midway there. So at about $20 a share, they made an acquisition. Share price went up to 40. They made another acquisition, 50, another acquisition. At 80, they made 2 acquisitions that were almost $1 billion in size with a combination of stock and cash. And now they're at 117. So they've clearly justified those higher valuations on the way up because they made smart acquisitions. They bought privately held companies that were at multiples that were lower than where they were trading and considerably lower than where their peers are. So you can absolutely justify a higher valuation if you make smart and accretive acquisitions. So in the past year, we've made 3 acquisitions, predominantly of tech and predominantly to round out our platform. So what's next? Well, in the process of doing those acquisitions, we've been introduced to and have been consistently shown new opportunities of companies that are not so much tech oriented, or IP oriented, but more sales and marketing, existing customer channels that would benefit from our platform. So we can absolutely start as we increase our valuation to make acquisitions of companies that are accretive and justify a higher valuation. So you can pursue this path. I mean, Lightspeed clearly did a hell of a job.
Yeah, you can follow the same. It's the same, and it's not like this is actually you start on that model, way before. But so the bottom line is this, though. So here's the investment opportunity as kind of I see it, like just from an investor's perspective. Okay, you're trading at basically 2 times revenue. The multiple is 2 times revenue.
That's right.
You got the stock. So you're generating. Let's just call it 40 million revenue. You're trading at $80 million valuation, whereas companies in the same e-commerce fintech space are trading at 10x. So which
actually 23.6.
23 or even 40. I mean, there's guys trading at 40, 50.
Yeah. The average is 23 and 23.6. But
yeah, I mean, actually, so 20x is okay. So even 10x is low. So if you just catch up, so if Logiq just gets that just from the valuation gets to the peer group valuation,
right.
That's just one of the paths for the stock to be 5 times higher than it is today. So roughly, did I do my math correctly?
10 times. But that's okay.
Okay, so 30, whatever. Listen, whatever it is, it's because these things always go. They either they either overreach or underreach. So it's at least I think a $20 stock. There's a path to get to a $20 stock. So okay, so let's kind of unpack here right now. You're operating in kind of 2 businesses, right? You have a kind of this e-commerce. You have the U.S. business or North America focused.
North American business. That's called Data Logiq.
Okay.
Very simply put, companies that are already online need to find customers because they're competing against Amazon and eBay and Walmart. So
it's a digital marketing. You're sort of like a trade desk. You do the same type of stuff.
Basically. We do now, yes, yeah. but the focus is different. I mean, for Trade Desk, they just came out with their quarterly results. They did $250 million in revenues this past quarter. I mean, staggering, right? But they've got a huge market cap. They've got big margins. Their stock's been tremendous. But just by their very nature, as big as they are, they serve Amazon, they serve Walmart, they serve Target. They've got all the big e-commerce players who have a minimum per monthly spend on advertising of $100 million a month, minimum. It's actually in excess of that, but that's the minimum they look at. And at their size, they have to. So for us, we have the same platform that they do now, which we have just completed our integration internally.
But for small to mid business, though, right?
Exactly, because those are the ones, and there's over 500,000 of these that have to compete with Amazon and Target and Walmart. How do they do that? They certainly can't use the Trade Desk tools. They can't use Google's DB360 tools because they don't have the big enough budget. So for us, what do we do? All right, well, can we take someone with a $10,000 or $100,000 a month budget or $1 million a month budget? Absolutely. And is it profitable for us? Yes. And in return, what do they get? Well, they get full transparency of what their ad dollars are spent on. They get a full look at what their return on ad spend is. And it makes them repeat that because they have a definitive return on ad spend, which currently it's really hard to do. There's a black box that your money goes into, and you don't know exactly how effective it is. Trade Desk customers do, and we've got that same functionality. So the Data Logiq side of the business does that. We've got a specific focus around small businesses, but we're also taking a bit of a different approach. With 500,000 potential customers out there, you have to have a lot of salespeople. So what we're doing is instead of going after individual small businesses, we're going after mid-size ad agencies that have those small businesses already. Oh. And in 2 months, we've already aggregated 12. Our target for the year is actually 20. Each of these serves between, call it 50 and 200 customers each. Some of them larger, of course. So that's our path towards scale. And the scale is absolutely there. I mean, people say, "Wow, e-commerce is so big. How much bigger can it get?" No, e-commerce is only 20% of retail. It's going to be 90% of retail in 7 years. So e-commerce is absolutely growing. Ad tech is absolutely growing, but what's challenging is for these small businesses to compete against the guys. Look, 5 companies control 53% of the whole e-commerce space. What does that tell you? And what about those other 500,000? It's so spread out and just so fragmented. It's a huge opportunity for us, but Trade Desk doesn't come down the chain to compete with us because what are they going to do with someone spending $100,000 a month? No,
they can't. No, it's a different market. It's a whole different system. So.
That's right. And for us, that business is extremely compelling because we carry 60-70% margins on that business, and it's fantastic, which is why we
margins. So speaking of margins, so here's the thing. So apparently, the thinking is, which is probably true, is that the reason why the multiple has been very low until now, which is 2x, why you're trading at only 2x revenues instead of 20x or 10x, is because historically or in the past you've had low margins. Now your margins are so there's a couple of, I think right now with Logiq, there's a couple of things happening which are going to which are catalysts for the stock to be trading at a much higher price. Well, number one is, which sounds very simple, is the fact that now you're trading in Canada on the NEO exchange, which opens it up to even though Canada is not a massive country, I mean, for a stock like Logiq, you don't need that many buyers. Like, it's a very thinly traded stock, and I think it's a much better market than OTC. So that's already starting to have a positive impact. We're already starting to see more volume in Canada. So that's one, right? That's just one little thing. It's a cosmetic issue. Number two is, the increasing margins. As people say that your margins are increasing to be, true like ad tech, marketing tech, e-com type margins, big margins. Then all of a sudden they're going to give you that 10x multiple. And then number three, I think, is the potential, the blue sky potential of those acquisitions that you could be doing. And I kind of want to go back to the acquisitions later, but let's talk about margins. I know it's kind of sounds boring for a lot of people, but what are you doing to increase your margins to those, the juicy, big tech type margins?
Sure, that's a great point, and you're right. And we tell this story every day. I think the average investor out there doesn't really get why gross margin improvement is important. But to put it in perspective, last year this time we were at about 15% gross margins on a consolidated basis. Right now we're nearly 30, so we've more than doubled the margins. So how would you simplify that? Okay, so last year we did roughly 38 million in revenues. That would be like doubling your revenues at the same margins, because you've doubled your margins. So, yes, this year over last year, you're going to see roughly flattish revenues year over year, but we've doubled the margins, which is important because, as you just pointed out, there were two reasons that we traded at a depressed multiple: OTC market and margins in the teens. With the feedback I got when I spoke to analysts and spoke to institutional investors was, well, you guys don't carry the type of margins that most companies in the e-com space or ad tech space carry. You really need to focus on that. COVID gave us an opportunity to do that. We cut off the lower margin business and started to focus around higher margin business on the App Logiq side, which is very simply put, getting offline businesses online in emerging markets. They're all on the mobile phone, not on desktop computers. Our platform is all on the mobile phone, not on desktop computers. So that's what's different between us and Shopify or BigCommerce or Wix.
And that's the business, App Logiq, that's the business that you have in Southeast Asia and in Indonesia.
That's correct. Plus, we do some other fintech stuff there too, which has a value which is actually probably pretty close to our market cap, but is not reflected in the market.
Oh, that's number four. That's catalyst number four, which we're going to talk about, which is the possibility of you spinning off that Indonesia business.
Yeah, that's right. Before we get too far ahead of ourselves, I would encourage everyone that's listening now to listen to our earnings call next Monday, because we will be speaking specifically not only about the quarter, but about initiatives that we're kind of touching on now, but I can't be entirely specific about until we report the quarter. But yes, we are absolutely intent on extracting value for that business. And I would say that now is probably an amazing time to do so, because just in the time of the past 3 months, there have been 3 announcements on Southeast Asian companies going into SPACs. Minimum size deals, $2.5 billion. The biggest one is $45 billion.
Indonesia is a red hot market. I mean, everybody wants to do this.
It's the hottest emerging market right now. It is. We've been there.
That's the last one that's been left. That's the last opportunity in Asia, really. Indonesia.
Well, there are some other ones, but they're a little politically unstable right now, like Myanmar.
Well, I mean, big ones. I mean,
Indonesia, that's right. It's the fourth most populous country in the world. But look, anyone having doubts about the validity of the market, I mean, look at SE. It just crossed $300 a share. When I started on your show last year, I think they were 30 or 40, but yeah, they're up huge. They've got a $200 billion market cap. That's all Indonesia. And that was a Morgan Stanley IPO. So if anyone thinks that Indonesia is this backwater that doesn't attract any real institutions, look again and look at the announcement on Grab and Altimeter Growth, the SPAC. That is a $45 billion deal. That's the biggest SPAC transaction in history. These are not little tiny companies. And we've been operating there for five years. And we know all the people there. We know all the companies valued at $1 billion or more. We're not there, nor did we ever intend to be. But our whole goal from the beginning was become relevant, build out a footprint, and so that when foreign companies that desire to operate in the region want to come in, what do? Well, they partner with you, they make a strategic investment in you, or they acquire you, or they scale into you. And so that's where we are now. And could we do it? And will we do it? Yes, absolutely, because that's been on our roadmap for a number of years.
Okay, so what's the possibility that you're gonna spin off this Indonesia business? Because that's actually, I'm thinking like as a separate standalone company, that could get a valuation that would be equal to what you have now. It could be 100 million plus. Because how much business is that doing, the App Logiq side with the deliveries and the fintech stuff?
The whole App Logiq side is there's two types of business. There's the type that we generate revenue on, and then there's the type that we generate transaction volume on. Because if you look at valuation metrics in Indonesia and actually Southeast Asia, they take the latter approach where they calculate the gross amount of transactions, and then there's a multiple of that. On App Logiq, it's a little more classic as things are here, where it's a multiple of revenue, net revenue, not transaction volume. And so, revenue attributed to App Logiq or the app itself, call it 10 million in revenue. Which is on our books. The gross transaction volume that comes through the e-wallet in the delivery has been as high as almost 30 million pre-COVID. Central Business District in Jakarta, which is our main focus, just went into their, I guess it's fifth or sixth lockdown, because COVID's still very much alive and well there, unfortunately. It's pulled back a bit. We're doing the audit now, which has unfortunately been a little slower. But if you want to ask about what would implied valuations be, probably between, on the very low side for the Indonesia business, about 20 million, and probably if you look at realistic valuations, between 60 and 78 million. And if you add in App Logiq's Create app, probably another 20 to 30. So there is an implied 100 million in valuation in an ideal scenario where we were acquired by a strategic. Yeah.
Okay. Or could you spin it out as a separate public company?
We could, and I have friends that have actually just launched SPACs that have one listed yesterday, in fact. And do we talk with them? Yes. And are there others? Yeah, there's a lot of SPACs that are getting.
You could dividend out that. Business.
Oh no, we would. Yeah. So all right. Yeah. So keeping things simple. If we spin off the business, what does that mean? Well, if we go into a public company, we get shares of that public company, and ideally it would be on NASDAQ or on NYSE, or maybe we do an IPO in Jakarta or in Canada or in the US. Then those shares get distributed down to the shareholder level. So our shareholders of Logiq receive shares of that company. So it's fully transparent, and you would essentially have two pieces, which
you're getting a 2-for-1 here. So basically, you're getting a free gift. Like right now, this is it's incredible. Okay, we're kind of tight on time, so I want to focus. I want to close out on two things. One is I want to get to some audience questions here.
Sure.
We have okay. So these are actually very good questions. So Naveed is asking, now that Logiq has the margin, is the next focus for Logiq to focus on top line growth?
It is, and again, Naveed, I would encourage you to listen to our call this coming Monday. On the last call, we had given some guidance or targets. Actually, there are 2 research reports out. One is Zacks. The other one is a gentleman in San Francisco, Christian Galati, who runs Phase 4 Research, which is 100% institutional. If you look at their guidance for revenue, which I think is pretty reasonable, they're looking at growth year over year, next year over this year, to be along industry norms, which is about 30 to 40% growth organically. And again, we've been talking about margin improvement year over year as well. As we've discussed here, M&A could change that substantially, because we have seen things where, you look at it this way. We're under NDA with several companies now that we're taking a hard look at.
And you've built the business through acquisition. I mean, you've done 3 deals in the past.
Partly, yeah. I mean, we've had good organic growth. And do we know how to do M&A? Yeah, I spent 20 years doing M&A, and prior to that, I spent 11 years in risk arbitrage. So we understand M&A very well. I think with a higher share price and higher valuation, we've seen some things that, they're revenuing north of 5 million, 10 million, 20 million, EBITDA positive, private market valuations, probably similar to our valuation right now. And if we merge them in and we're carrying a market valuation that looks real similar to our peers, you get the uplift. And again, look at Lightspeed. I mean, they went from 10 to 117. They made 5, maybe it was 6 acquisitions, but it was a lot. And they did subsequently larger acquisitions. The last ones they did was almost $1 billion of acquisitions, when a year ago that was their entire market cap. So can you grow through that path, and will investors reward you? Yeah, absolutely. And real quick, I just want to touch on something that you mentioned earlier. So now that we're on NEO, I think that's been sort of a question mark for a lot of U.S. investors. It's like, why NEO? Well, in the past 3 weeks, I have every day gotten calls from or emails from wealth managers, institutional investors, and high net worth investors asking for calls with me and our CEO, Tom. And there's 14,000 wealth managers in Canada. All of these guys, see IPOs going on. They're all familiar with the NEO. So we've been busy talking to brokers, analysts, money managers, and we didn't see that kind of activity on the OTC. Yeah, that's been good. If you look at the volume, I mean, Jack, look at the volume in the past 2 weeks. There's a significant step up in volume on the NEO. And if anyone doubts the validity of the NEO, I just got something this morning. Google, Tesla, and I think it's Amazon, their Canadian depository receipts are on the NEO. They could have gone to Toronto, but they're on the NEO too. So, the NEO is setting things alight. I mean, they're kicking ass.
Well, I think it's going to make a big difference to have the shares available for Canadian investors, because realistically in the U.S., on the OTC market really is kind of like a backwater. It really is. It's very difficult to have. There's very few real companies on the OTC. Let's just be.
That's true. So, I mean, I don't want to badmouth them, but you're right. It's really gone downhill. You really only have NASDAQ. That's a valid market in the U.S. So the fact that you're available for trading in Canada, on the New York Exchange, anybody can buy it. I mean, you can have institutions buying it, and they're much more. I think these guys are much more open-minded to a company like Logiq. Whereas in the U.S., investors don't want to look at big institutions. They don't want to look at $3 stocks. It's like they want to look at $20 stocks, right? So 50, So it's just like a lot. So it sounds very trivial, but it's not. I mean, it makes a big deal when you have, because you don't need that much buying from Canada to move the stock. I mean, the stock is very thin. It's like, I mean, it could be $12 tomorrow with just a little bit of activity. Okay, so in terms of M&A, you have a pipeline right now. It's a big pipeline, yeah, and it will continue because we have relationships with with investment banks that specialize in nothing but tech M&A. So they're sell side representatives, and there's all kinds of stuff that we've seen on the private side that looks great. So yeah.
Okay, so I think that's going to be the big thing. Okay, Brent, let's kind of catch up with you in the first week of September. Hopefully, maybe
for sure.
You might have some deals by then. Maybe you have some announcements by then of some M&A activity. Because I think that really that's one of the things that investors really, at least in our audience, that they love to hear is just deals. This is this is what makes these things move.
Absolutely. And if you do it smart, you get rewarded. And Lightspeed is a perfect example.
Excellent. Brent, on that note, I want to thank you, and we'll see you in a couple of weeks.
Terrific. Thanks, Jack.
Thank you again.